Hello, hi everybody. Thanks for being the brave ones for the last sessions. So I'm very pleased to be sharing with you a little bit about what we've been doing for the past decade in trying to solve some of these challenges in powering Africa. So we essentially sometimes refer to ourselves as being the ex-Sun Funder team. Some of you might have come across our company for the past 12 years. We have been a specialized asset manager focusing on off-grid and decentralized energy solutions in emerging markets. So we started as a crowdfunding platform, so literally bottom up from a dollar catalyzed into the market, up until 3 years ago, where we got acquired by Mirova, which is a very, very large French asset manager owned by BPCE, which is the second largest retail bank in France, but within a department which is strongly focused on impact. So Mirova as a company has been exclusively focused on impact financing and investments for the past decade also. So it was quite a good marriage where they actually needed to go global and thought about joining forces with us and developing their presence in emerging markets. So within Mirova, we essentially fit within the first vertical, the energy transition. At Mirova, it's been quite a strong focus with almost $4 billion of assets under management to date, mostly in the equity space in OECD countries. So think about owning and operating large-scale projects across Europe, particularly. So we fit within that team that has been doing that fantastically over the past decade. But we're not only an energy house, we're also a nature-based house and an impact private equity house where we have more generalist funds that we're able to also deploy. I think Sebastian mentioned it, but we have quite a strong research team on the ESG side. It's very important for us to be not only claiming that we have impact, but actually be able to substantiate it with data and be at the forefront of creation of those benchmarks and KPIs and ways of educating the market also that these topics are actually investment grade. Not only investment grade, but also allow us to have that multiplying effect within the economies we're all active in. So we're doing a bunch of really interesting programs. The last one being with the Columbia University, where we're trying to convince LPs that risk return for our funds that actually makes sense. The blended finance approach that I'll get to in a minute. We're very much on the ground. I'm not a good example. I'm in France, but I do spend a lot of my time on the ground. But we have teams in Nairobi, in Singapore for Asia, and soon somewhere in Latin America. And because we do everything in-house. So we try to standardize in order to be more efficient, but we come from a DNA of doing. So that's why we generally forefront due diligences. We do most of the analysis in-house. We have our technical team, our ESG team in-house, our legal teams. So we are able to really capture most of the analysis within our teams. And then where do we invest? Well, you see Africa, almost real size this time on the map, but we're quite active in Africa. And it is one of the key areas of focus of our energy nexus. Because of the need for more sustainable energy as kind of at the forefront of generating more dollar out of that dollar of energy that Anish was just speaking about earlier in the panel. So what have we been doing? Well, we've been, and this is our mantra, you might hear all of us saying that, pioneering and scaling. So we've started this journey, as I said, more than 12 years ago, with a very tiny, very specialized $15 million fund. And since then have really built up to where we are today. So we're at our fourth vintage. We've raised and closed almost $300 million. And we're planning to increase that over the next year. So definitely looking at trying to make it even more catalytic. And this fund is, and I'll get to it here, has the particularity of being a blended finance fund. So we've been only structuring, developing, and deploying blended finance funds. And believe it or not, we've been able to raise the riskier tranches of the capital. So the junior is actually what we raised first, and then we went on to raise the senior notes, which is mostly DFIs. And currently where we are putting our effort is really to catalyze private institutional investors, because that's where the game changer is going to come from in our economies and in our topic, is if we convince large LPs that these topics make sense, that they're investment grade, and that there is huge opportunities on the back end of it to capture for them as asset owners and managers. And so blended finance is not only about this tranching, you know, it's also about creating partnerships to further alleviate the portfolio risk. So we've been supported by the Swedish government through SIDA over the past 3 vintages, actually. And so they provide a portfolio guarantee that allows typically the senior notes and the super senior note to take even more comfort on the type of investments we'll be doing. FX and currency issues, I mean, we've been sharing with our investees for as long as I can remember that this is a key risk, and they have to develop FX policies and so on. But it is difficult to ask an investee on profit margins, which are incredibly tight or sometimes not even yet break even, to incur a cost on the hedging side, which makes their businesses even more difficult to break even. So we're trying to develop those relationships with FX hedging partners, both MFX and TCX of this world, but also local banks, and develop products that can be a little bit more innovative to alleviate some of that risk and take on, or make our investees not less secure to facing huge backlashes when, you know, the Kenyan shilling, the naira, unfortunately, keeps devaluing. Then what are we focusing on? So really, what are the subtopics that are supported by the fund? And here, again, just learning from our journey, we haven't changed a lot. We're still trying to, and maybe other fund managers like, I don't know, hope to different topics or try things a little bit differently each time. We're not. We really like drill down into certain topics and try to get it better, or at least never do the same mistake twice. So these are the topics that we focus on. Solar home system and residential solar is key to us. I think in Africa, thank you. In Africa, we learned horrendous statistics that actually the number of people with no access to energy has gone up. So we're clearly not there, and we're doing something severely wrong. So we have to keep at it and keep trying to find ways of getting people electrified. The second topic is probably one of the most difficult, mini-grids, and well, we bundle it with agri-solar for a number of reasons, but essentially trying to get more grids off the ground to connect villages, small towns, etc., across our markets. Third topic, commercial industrial. I mean, the CNI is one of the biggest where one of the biggest need is. It's not growing to the pace that we would have hoped for, or that made economical sense for a number of reasons, but we're trying to develop frameworks, again, to be able to deploy not only actually $5 million loans, which is roughly 5 megawatt of installed capacity, but trying to do portfolio approaches where we're actually able to finance the 100, 300, 500 kilowatts peak projects that we see and are needed. Spin-off of the commercial is the telco, and then lastly but not least is what we call the auto clean energy. So e-mobility, storage, energy efficiency are topics that we're also interested in. But I don't think we have a lot more time, but would love to engage more if that can be of interest. Thank you. Oh, we have 4 minutes actually, so if there are questions.
We do have time for questions, if there are any questions for... Thanks, Rim. Very interesting. And my name is Michael Mills. I'm now working for the UK government on energy access, energy investments into the region, Southern Africa, both directly and indirectly, including in South Africa's Just Energy Transition platform, JETP. But from a similar experience of yours, you will know from other conversations that I've been in the same space. We've, 5 million of POP are just what a large part of the region needs, but it's a very small amount. And often you will look for ways to secure that investment, and the only thing you come up against is a rather complex, rigid project finance secure package, and it's hard to make that work. Have you sort of squared that circle? Are you able to do these 5 million of POP without going through all that sort of rigmarole?
Yeah, that's a great question. I think our investees would say yes, for a number of reasons. So when we try to be as close as possible to the cash flows rather than the assets. So even though we finance assets, what we're interested in is how are we going to get repaid. So for us, the most important thing is more the source of repayment, so the receivable underlying a potential contract, a potential receivables of pay-as-you-go, for example, in the solar home system space or in the e-mobility space, because it's the same kind of logics. So generally, we do not go for belt and suspenders with, assets and. We try to be as close as possible to the cash flows, so receivables and cash. Yeah.
Hi, I'm Dotun. And you mentioned briefly about Nigeria and their problems originating around the currency and everything like that. I would love to know how you managed that risk, especially with the devaluation of the currency happening recently, and how that's affected your investment thesis and idea going forward.
Yeah, I would love to have found a solution for Nigeria, trust me. The way we look at it is in the context of a specific transaction, obviously. So essentially, we're looking at either trying to create, to just hedge, either through a non-deliverable forward, a synthetic cross-currency swap, through the banking relationships that we might have within Nigeria and outside, and taking the deliverability risk. So at least taking part of the risk out, the volatility, but not completely offsetting all of the risk, so the deliverability of the dollars. It's not an easy topic. We generally try to find businesses that have built in some resilience to the risk of devaluation. So typically being able to index some of the revenue to the devaluation of the Naira, being able to change a little bit the cost structure when the Naira moves. So that dynamism of pricing methodologies, etc., generally require more sophisticated investees to be able to do that. And we try to help the ones who are not yet there. So explaining some of those dynamics so that they can become more sophisticated in the way they manage their currency risk. But there is not a single solution that works for all. We try to tailor make it. Yeah. Thank you. Thanks.